Hello everyone, before we get into it, I'm going to include in the beginning of this video just an update on the polls. Had this intro to the US marijuana ticker video that I just did, so going to leave it here. I know the results for the US election and these states are not as pertinent to the Canadian names, but some useful information to have either way, and then we'll get into the tickers. We're going to be looking at CGC, OGI, ACB, APH, and MT. So we're going to look at some of the most recent polls. We're going to look at some history from 2012, and then we are going to look at the current charts as we head into Election Day this coming Tuesday. Before I get into it, if you are interested in this sector and have not seen my 2-hour webinar I did a couple of weeks ago, hop on over to my YouTube channel and check it out. There's a separate playlist for MJ stocks. I really think there's a lot of information that anybody playing this sector needs to watch. Aside from that, we're going to be making a website over the next couple of months specifically for fundamental and technical analysis of legitimate marijuana plays, digging into financials, and posting some videos there to be watched. And I just want to let you know so you can keep a lookout for it. I'll certainly let you know when that is up and running. But I'm looking forward to creating a really nice informational website that a lot of people can utilize for some informed decision making with this sector as it continues to develop. So getting an update of the polls here on the weekend heading into the election this Tuesday. Not much has changed. There have been a couple updates. Massachusetts 49 to 42. It is tightening a little bit. The most recent polls show a decrease in the spread between pass and fail. We've got Arizona. It's still leading, although there was one poll where Arizona was losing by a point. So I would say Arizona is the most up in the air out of the 5 recreational states because it's the only one with a fairly recent poll that does show it losing. Nevada's still winning. No update there from the last video I did. California looks like a sure thing. It would be very bearish if California were not to pass because I believe it is being priced in to pass, and we've got Maine passing as well. Florida looks like a sure thing. So what I am seeing is that all of the bullish reaction is or should likely be factored in to these names at this point. The only thing that I could see leading to a bullish reaction the days right after the election would be if we get a clean sweep of all 5 and the media really jumps all over that. That is a possibility, but the way that these polls are set up, there can really only be disappointment because they are showing a win in every major ballot decision. And if any of them weren't to win, that would just lead to some disappointment and some likely sell the news event. So let's look back at history now. Let's look back at some of these original names. This is going to be looking at October, November, December, January, February of 2012 and 2013. The vote where Colorado and Washington passed was on November 6th. So let's look at the reaction that occurred. And out of these names, there's going to be every kind of different reaction that you could anticipate. So it's not really going to help us much with the sector overall. What it is telling us that it's really going to be individual on a per name basis on what to expect. So here on November 6th, we had MJNA, little bit of a pop the next day, very lackluster, and then led to a 4-day sell-off. Then we traded sideways for about 3 months, and the bulls showed back up in the new year. In late January and early February, another breakout occurred. But the point is, after the election, very little sign of the bulls for the next few months on MJNA. You look at hemp, look at the run-up into the election. Here's the vote on the 6th, and on the 7th, gap up open, sell into the gap, no real bull movement, bears in control for 3 months, and then the bulls start showing back up. End of January, start of February, same thing as MJNA. We've got GRNH. Here's a different reaction. We had a little sell-off into the vote. Then the day after the vote, the bulls started to show up, and we did get a strong move right out of the gate, but same thing, traded sideways for 3 months, and then the bulls showed up again in early February. PHOT, leading up into the vote, no reaction for the bulls the next 5 days. Then the bulls showed up out of nowhere for 2 days, but same thing, sideways trading before the bulls showed up in February. And one more here, CBIS. CBIS is the only one that ran after the election. There's the results and a breakout for multiple days. But after the breakout, sideways trading for 3 months before the spike in February. So what this does tell us is the majority of the stocks did not see a breakout following the vote. We had one that did, CBIS. But the main point is it was essentially dead money for the next 3 months. Tighter ranges, tighter and tighter, no real movement to the upside. There were some trading ranges that you could play back and forth, but The 3 months following the election in 2012, the bulls disappeared, and they didn't show back up again until February. So like I said, some individual names will likely see a rally after the vote, but I would say on the whole, the sector will consolidate as the hype is being priced in before the vote ever occurs. That's just an opinion. We'll see how it plays out. I could be dead wrong. I could be right on the money. Either way, it will be very interesting on Tuesday. Now let's get looking at some of the charts. So we're going to start with CGC here. We're going to be looking at the daily and weekly time frames, and I'm going to do some live drawing of my trend lines and such on these charts so you can see how I do it. And I'm putting a resistance horizontal line right here, the highest close we have seen on this move, putting my resistance line right there, and we can see we rejected from that point back on this previous Wednesday and then pulled back. In terms of support lines, an uptrend line, I hit the real bodies of the candlesticks and I hit the bottom of the bear candlesticks, so the price never closes below that uptrend line. And even though this green candlestick dipped well below, the bulls bought that dip and maintained that level, and you can see the price action is bouncing off the support line. Even Friday, big dip, but the bulls bought the dip, closing above the uptrend support line. So this uptrend support line is intact until we close below it, and so is that resistance. So you can see this range is getting tighter and tighter. This is an ascending triangle pattern, and there are patterns where you can get some indication in terms of whether it's more likely to break bullish or bearish, but I like to wait for a clear break on the pattern and not make any assumptions on which direction is going to break. So by mid this week, we should see a very clear break of this pattern. A close above 722 is bullish. That's the highest close we've seen. Then resistance will be 735, the highest price we've seen. And if we lose this uptrend support line, the bulls want to maintain 655 to maintain the higher low pattern. If we lose 655 support, we're going to start forming lower highs, and then that will be a lower low and the potential change in the shorter term trend. So keeping an eye on this very tight pattern, CGC has a clear break coming this coming week. Weekly time frame, not much history, so we don't have Bollinger Bands and we don't have 20-week moving average support because there hasn't been 20 weeks of price action. So we can see that clear upper wick rejecting from the $7 psychological resistance level. The bulls did buy the dip last week, but in terms of moving averages, not much information. And because the daily chart pattern is so clear, this is the time frame I'd be watching, not that weekly chart. So we'll see on Tuesday or Wednesday which direction we break, and we'll know which direction to be looking at for the short term. OGI. So looking at a clear downtrend, and we can see a resistance line. So I'm drawing my downtrend resistance line so that no price closes above it. So I'm hitting the top of the green candlestick real body to start. A lot of people draw their trend lines hitting the upper wicks, and that's fine. There's no right or wrong. I personally prefer the real bodies. What matters the most is that you stay consistent. So you don't want to be drawing a trend line that's hitting the upper wick and then pulling down and hitting the real bodies. If you're going with wicks, stick with the wicks, and if you're going with real bodies, stick with the real bodies. Remain consistent. So I would put my downtrend resistance line right there. In terms of support, there's a very clear base of support being built, and I'm looking at the previous price action to put this support line here. So I'm going to be looking at down there. I could put a line where we built this base. We hit a low of 228, 228, 230, building that higher low, and we've still maintained higher lows. And even on Friday, although we did dip below the previous higher low of 236, we closed above that level. So that support is still intact there. I could put another support line at that 236 level because the bulls bought that dip and we did close back above it. So it's a complete opposite pattern of a descending triangle with lower highs but a horizontal base of support, and we can see the range is tightening. It's not nearly as tight as CGC. We could bounce around in this little tight trend all week depending on the action. We can see an increase in volume on Friday for OGI, and with the lower wick that does show bulls buying the dip, this is a bullish reversal hammer. If we get a green day on Monday, it will confirm the bullish reversal hammer, and we'll look for a bull move up towards this resistance line around the 260 area. So bulls really need to show up on Monday after this lower wick. Otherwise, we're going to see lower highs and lower lows, which is obviously not the kind of pattern the bulls want to be seeing. The weekly time frame does look like a potential bull flag. It still has to play out a little bit, but a bull flag is when you have a strong move to the upside, and that would be the flagpole, and then you have a parallel support and resistance line on consolidation, and you want to see normal healthy consolidation after a big bull move with decreasing bear volume, and we do have that decreasing bear volume. We have the parallel channel of these 2 weeks fitting into place, and we have a flagpole, the bull move to the upside. So this is a potential bullish continuation pattern, and we will know that is the case if the bulls show up and can close above this downtrend resistance line up around the 270, 280 area this week. And if not, we'll look to see if the bulls remain in this channel over the coming week as we continue to consolidate. And again, we will watch the volume and the price action to get a clue as to what is going to occur. And watching the daily, just like we are CGC, tightening range is forming. ACB, the most bearish name out of the 5. Recent IPO, very clear lower high pattern formed right out of the gate. We had the high of 244, a lower high of 238. The red flag was right when we broke this low of 196, because at that point we had the lower high and now we have a lower low. Look at the volume. We have increasing bearish volume 3 days in a row as we dumped and took out support levels. So we had the higher lows clearly in place, but we took out that higher low pattern on increasing bear volume. Granted, the bulls bought the dip in a big way on Friday, big bullish reversal candlestick, but that was a 30% loss on anybody that was buying up at the top, and that happened in just a short amount of time. So this is a bit of a red flag. This tells me that there are people exiting this stock. I don't know. I have to look in the financials to see who was awarded shares on the IPO, who might be dumping, if it's insider selling. And you can see the clear pattern here. As we saw this pattern tighten with a lower high and higher low, the volume was decreasing, and that is very normal of a tightening pattern. And then the volume started increasing, clearly favoring the bears. So a red flag hitting new all-time lows. We have this base of support down at 169, the low of the IPO, and we did close above that level. So that 169 is still support. You can put a support line there. But there are resistance levels to be watching. Next resistance we will look at from here would be the high of Thursday, which was up at 207. We also have $2 psychological resistance, which is just about where we rejected on Friday. So 201, the high of Friday, 207, the high of Thursday. Those are the next two levels. Bulls need a solid green day on Monday to confirm this bullish reversal candlestick, but we have a long way to go. This is a very clear downtrend, and in order to form an uptrend, the bulls are essentially going to have to hit a new all-time high. Weekly time frame, not much worth watching due to how recent the IPO is, not much information on the weekly time frame. APH, very bullish uptrend over the past month, and we're getting very tight here again as well. A very similar ascending triangle pattern. There's our horizontal resistance line at the high. We saw the high of 404, a lower high of 401, clear resistance. And in terms of support, we've got another uptrend support line we could draw. We could put it at this level, hitting the lower body real wick, or the lower real body candlesticks. And that is an important uptrend line. You can see the range is getting very tight. Look at the volume sloping down. We will see a very clear break of volume when this pattern breaks. And so we have our high at 404, our pullback and our low at 332, lower high 401, higher low 337, lower high 396, higher low on Friday. Bulls bought the dip 365, bullish reversal, dragonfly doji. You can see the price dip to the low. Bulls bought it up and closed it at the high of the day. So we're going to see a clear break of this pattern within the next week or two. And again, watch the volume. Very clear pattern of declining volume. If we get above $4 and close above $4, it will be a bullish break and indicate continuation. And if we lose this uptrend line, if we break the higher low pattern, we will know the trend is changing to favor the bears. The very clear uptrend on the weekly time frame, still very much intact. The 10-week moving average support is here at 339. We're still well above that level, but you can see that clear base of resistance rejecting the price, and we're going to see a clear move. So moving on now to our last name, MT, very similar pattern to APH with that horizontal resistance line and the ascending triangle pattern. Let's draw that same layout here. And we've got our resistance, a double top. We had a high of 424, a high of 424, so an exact double top and now a pullback and a lower high. So here, let's draw our uptrend line, and we can go from this base of support back here, and we broke bearish. So there's some red flags sticking out in this chart. Number one, the double top, then the lower high. We still have our higher low maintained in terms of price action. We had a low here of 345, a low here of 353, and now we're going to see if we can form a higher low. Increase in bearish volume Thursday to Friday, a red flag. Break of the uptrend support line. This isn't game over for the bulls, but this is the kind of pattern break that I now start paying very close attention because the bears are giving me the signals that they're showing up. So as long as we hold 353, it will still be a higher low on this uptrend. So even though the uptrend support line has broken, we still have the price action support in place. But we can also draw another downtrend resistance line now, looking at where we topped out. And we can watch that downtrend now from the lower high pattern. And if we get a lower low, it's going to be a very clear break for MT. Bearish reversal hanging man, or almost a doji last week, and we confirmed it, or 2 weeks ago, and we confirmed it last week. The 10-week moving average support is currently at 356. That's going to be up closer to 360 with the open next week. So if we can hold the 10-week moving average support, the longer-term uptrend will still be intact. We held it on the last consolidation. After holding it for so long over the past 5 months or so, losing the 10-week moving average would be another big red flag that the trend is changing and we're seeing significant profit taking. So red flag number one, bears stepping in on the daily time frame. Still not game over for the bulls. We have that low of 353, but it's time to get cautious with MT and time to protect that profit if we break the higher low pattern on the daily time frame. So just a quick summary, CGC expecting it to break first from a very tight pattern. We've got APH also in a very tight pattern, looking for a break next week or the week after at the latest. MT starting to give signs of the bears. We could see the bears show continuation early next week. Keep an eye out on that volume. Another red day on Monday on increasing volume would affirm this red flag is absolutely worth paying attention to. OGI needs to hold this base of support. Bulls need a green day on Monday to confirm the bullish reversal hammer. And we've got ACB, big bullish reversal hammer, or big bullish reversal candlestick. It is not a hammer. The hammer definition, the lower candlestick, the lower wick, needs to be twice the size of the real body of the candlestick. And we're about half and half right here on this candlestick. So they need a green day on Monday to confirm the reversal, but red flag hitting new all-time lows and clearly seeing a lower high downtrend. This is the only name of the 5 that is in a downtrend with lower highs and lower lows. The rest are still in a really nice longer-term uptrend. So I hope this was some informative information, and I welcome any comments, feedback, whatever you got, lay it on me, and we'll check back in midway through the week or towards the end of the week. I hope you have a great rest of your weekend.